Okay, so it's currently Sunday and it's 8:47 p.m. just a few hours before the market opens. So I want to quickly just like check what has happened previous week and what is going to happen or what we expect to happen this week. So last week took one trade, just one trade, and continuation entries are not working. But let's just check what happened last week. So last week we had, sorry about that. So this was last week. When we go to forward, this was Monday, yeah, Tuesday, Wednesday, Thursday, Friday. So these are the last five candles from last week. So we're going to drop this up to Friday. Good. So this is how last week panned out. And before last week happened, we were in a bearish market right here. We were in a bearish market, and our range was marked from this high to this low. From this high to this low here. And previously, we were seeking liquidity. We were pushing into the um, into the range. So by marking these boundaries, I've answered two questions, which is the first is the trend is bearish, as you can see on the daily. You can see that the trend has been bearish, right? We've had price trading below the EMA, and also we can just quickly mark out this trend line from here all the way to the downside. You can see that price has been respecting that trend line. So we've been bearish, right? So I've nailed out my higher time frame trend. Now my higher time frame range has been marked also, so I've figured out my bias. My bias is bearish. The next thing I want to ask myself is where is price coming from and where is price going to? So looking at that, before that last week started, we can say that price had is coming from external liquidity. Now that's all I need to know. When I say where is price coming from or where is price going to, what I mean is what liquidity has price taken out and what liquidity is price trying to seek. So we can see here that price has taken out external liquidity, some sort of external liquidity, which should be a major liquidity, right? And obviously this is a previous week liquidity that was taken out, right? 2 weeks ago, this week was taken out. So now we can say that we've taken out external liquidity, meaning we want to seek internal range liquidity. Now at the moment, I was looking at this high, but because of the fact that this had a POI involved in it, I looked at this high. This is also a previous weekly high, right? So with that being said, I knew already that price was going to seek. Let me make this accurate. Okay, yeah, right, yeah, good. So I knew the price was going to seek out external range. I'm sorry, it was going to seek out a major liquidity because it had taken out external, it's going to look for internal. All right, so now I know where price is coming from and where price is going to, meaning we can afford to buy. But last week we didn't take any buys, right? I wanted external liquidity to be taken out before then we can look for what sells to the downside. So with that being said, the next thing I want to do is I want to pick out my point of interest. Now in this kind of area, because at the time when we entered the market last week, price had gotten here. This is out of my scope, which is a breaker block. The next thing I want to look out for is the point of interest, which is this. Now this was the whole point of interest at the time, right? At the time, this was the whole point of interest at the time. So I figured that price would want to seek liquidity into this key level, right? If you look like further, you see on the weekly time frame that it was also a open close area, but I'm not interested in the open close. I'm interested in the point of interest itself. What I just came to show you on the weekly is that you can see that on the weekly it had mitigated an open close. Also, it took liquidity before mitigating that open close. So for me, that made it a strong point of interest. So back to the daily. we've mitigated that point of interest. But because the liquidity is inside that point of interest, I want to refine that point of interest. And that's what I did. If you go to the 2 hour time frame or 1 hour time frame, you see the refinement. So we had this point right here as the refinement. However, remember, I'm not going to be taking the direct entry from here. I want to see price give a reaction before I take a direct entry. So last week came in and not only took out this previous week high, but it also took out the immediate previous week high, which is this. I don't know why this is. I don't like the. So if we are to look into this, you see that price also took out this week. Let me delete this now. We have. So you can see that price also took out the previous week's high. So it took out both of them. And now I can tell you that, okay, this means that liquidity has been taken. Now, the next thing I want to figure out is my alignment. So now the higher time frame trend is bearish. The higher time frame range is bearish. I want to be aligned on my median time frame, which is most likely the 1 hour time frame. I also want my 1 hour time frame and my 2 hour time frame to be what? To be bearish. And that would involve a market structure shift, right? Or a change of character, either ways. You can see here that market has been pushing up, creating, okay, let me use a brush, creating higher highs and higher lows successively, right? So we've been creating higher highs and higher lows, and this is meant to continue until price or unless price wants to reverse. So we have this, we have this, we have this, and finally this high that took out both weekly highs. And somehow you can see price breaking below this. So this gave me the first idea of price wanting to reverse, right? So if price is going to reverse, I'm not just only going to stick my guns to this market structure shift or change of character. No, I also want to see price give me some sort of structural liquidity or inducement. And with that, I mean the first pullback that happens after this break. And if you're looking at the first pullback that happens after this break, it is this high. So now this high is now marked. I now have my inducement. And the reason why this inducement is valid is because it closed back down below the close of this. So now this means for me that I am what? I am looking to sell because now my median time frame is the same as my, you know, my higher time frame. So the only thing left for me today is to make an entry, and I'll be using the higher time frames from where I picked out my structure, and I did that on the 4 hour time frame. So on the 4 hour time frame, my entry was here. I'll put the screenshots above for you to see. So this is where my entry was. Took a trade from. It's just simple. You don't have to wait it. This and the stop loss was around here, and some of you would think this is too much, the stop loss. I'm not a day trader, so I'm okay with that. And my TP obviously would be this low because it's the external liquidity. Must price get there? No, but I am comfortable holding this trade in this manner, right? And so now we're going to be looking at this week. What is price going to be doing this week? I know I could have taken other trades, but last week was a busy week for me. But let's see what price is going to be, what price has for us this week. So we're going to be going through the same scenario that we went through, right, when we were looking at the previous week. So now this week, we're going to be looking at what has happened last week, right? And from what I can tell, the trend is still bearish. Let me just delete everything here. So from what I can tell, the trend is still bearish. And we still have a bearish range. So our higher time frame trend and range is still bearish because this range is still intact, right? So we have a bearish trend and a bearish range, meaning when it comes to our bias, we are still bearish. Now, where is price coming from and where is price going to in terms of liquidity? In terms of liquidity last week, right, we have taken out a weekly liquidity, which is previous week's high. And with this done, naturally, we should expect the previous week low to also be a target liquidity, right? So that is what we're going to be basing our liquidity from. So where is price coming from? You can put that down. Where is price coming from? Just simply say internal range liquidity, IRL. Where is price going to? Equals ERL. So that takes us to our median time frame. What exactly is happening on the 1 hour or the 2 hour? Is it aligned with what we are seeing on the higher time frame or not? So we go to the, I like to use 2 hours, it's quite precise. So on the 2 hour, we can see that if we are marking out our highs and lows, we have a low here, we have a high here, we have a low, we have a high that took out liquidity and further broke structure, making it a protected high. So for me, this high, if it still remains, we are still bearish. Note that out. So we are still bearish. So with that being said, let me make this very clean. With that being said, let's see what price has been doing recently. Liquidity grab and break of structure. So we have this. So now after that, what did we have? We had price retrace into this top before then breaking back down, creating some sort of ABC for us to work with, right? So with that being said, we now have this high, this low, this high, which is serving as inducement, and this, okay, hold on, okay, all right, this low, all right. I just did a bit of swing high counting to be sure of my swing highs and lows, but that's also very important. So now you can see that we have an ABC and price has gone just before the week closed. You can see price took out liquidity and mitigated this place right here, right? So this is also a way to look at it and say on the median time frame, we are still bearish, right? But we are going to only look for a trade when we have our multiple break of structure at any of these points, and where I'm going to be looking at, where I'm going to be looking to take a continuation trade is going to be after this low is taken out this week, because we could see price come this week or by the opening of price take this out and come into this area before we see it drop to the downside. Either ways, if this high is taken out, I'm no longer looking to sell. I'm going to be waiting to see what price is going to do, because this high should be protected. It should not be broken, because this was a mitigation high. It came to mitigate whatever block we had here before we can push down. And then this is an A, B, C, and price can, it's allowed to take out this B. It's not we don't want it to take this out, because if it takes this out, then this disturbs our bias. So this is something I'm going to be looking out for, and we can now look to sell if this low to get taken out during the week or this area is mitigated. So right here, I'll be looking for an MSS, right? But right here, I'll be looking for an MBOS. So it's that simple. We'll see what market will give. So currently the MTF and the HTF is still bearish. So we'll keep following the bearish bias till we take out external range liquidity. So that is it for gold.